Good morning friends, welcome to the YouTube channel Advocate Amit Kumar Gupta. In my series on the income tax cases, the case which I am going to discuss today is very important case. The name of the case is Assistant Commissioner of Income Tax versus VENDHAR. This case is reported in 97 ITR, short notes page number 17. The matter has been decided by CHENNAI ITAT and the date of the judgment is 24th June 2022. This case is related to a search assessment. There was a search on the Assessee. The Assessee was a partnership firm. When the search took place, the search team found a notebook at the premises, and in that notebook there were some jottings, there were some figures relating to various expenditures. One of the partner of the partnership deed admitted that these expenses are related to a movie, and from the sale of that movie there is an income of rupees 7 crore to the assessee. Income means gross revenue. This was the statement of one of the partners of the partnership firm. When the assessment was in place, the assessing officer added this 7 crore into the income of the assessee without allowing any expenses relating to that making of the movie. Meaning thereby that without giving the benefit of any expense for the amount of 7 crore which was taken into the profit and loss account, 7 crore was taken in the P&L account, due to which the income of the assessee increased. But the point of the assessee was that the assessee has incurred a lot of expenditure for the sale of this movie, and even the expenditure in this particular case was more than 7 crore and loss was coming. When the loss was coming, the assessing officer was not impressed with the version of the assessee that these expenses should be allowed. But this is a general concept that if you are taking any income into the profit and loss account of the assessee, then for calculating the correct income of the assessee, it is very essential that you allow all the expenses which are legitimately available to the assessee. But you recklessly and arbitrarily added the income of 7 crore to the income of the assessee. Assessee went to the CIT appeal for this arbitrary addition, and the CIT appeal gave the relief to the assessee that expenses should be allowed, and after allowing the expenses there is a loss, so practically there is no addition for the assessee. The department went to the ITAT as usual, and the ITAT also upheld the order of the CIT appeal by saying that all the expenses should be allowed to the assessee, for which the income has been taken by the assessing officer into the profit and loss account. Without allowing the expenses, you cannot add the income. You add the income, you take the legitimate expenses, and then you calculate the true income of the assessee so that the tax can be calculated on that income. Friends, this is the general practice we see in the cases of search, that whenever there is a search and the assessee found and the department founds any amount which is not properly recorded into the books at that particular time, then the department goes for the addition for that amount without going into the integrity whether this amount is taxable or not, whether some expenses should be allowed in contrast to that income, and due to which the assessee has to fight a very long battle to get relief. But this is general practice. I hope that some message should be there to the CBDT, although there is a circular of the CBDT which says that addition should not be made only on the basis of whims and wishes, it should not be made only on the basis of the statements, and the department should try to collect as much as evidence to authenticate the additions made by the assessing authorities. Friends, this case is very important in dealing with the search cases when the additions are made very arbitrarily. At the end of this video, I am once again repeating the name of the case. The name of the case is Assistant Commissioner of Income Tax versus VENDHAR movie, and this case is reported in 97 ITR, page number 17, short notes, and the matter has been decided on 24th June 2022. Thank you, friends.